had its IPO on the London Stock Exchange in 2006. It's an investment company and it's listed on the premium list of the market. It was created originally as a portfolio of 15 investments in public-private partnerships and has grown since then to have over 116 investments with a value of over £2.5 billion. As an investment company, it has a board of independent, non-executive directors, and the manager or the investment advisor is Infrared Capital Partners, of which I'm a director. So I've been working at Infrared for over 20 years. For the last 3, I've been leading the team which is responsible for managing HICL on a day-to-day basis. Prior to that, I've held a variety of roles, including opening the New York office, where I led a team which was making investments in infrastructure, both in Canada and the United States. So HICL was set up and designed to deliver for investors long-term stable income from a portfolio of infrastructure investments, which is positioned at the lower end of the risk spectrum. And to do so whilst offering inflation-correlated returns for those investors who hold an investment for the long term. In practice, what that means is HICL is about delivering dividends. And for the 12 years since its IPO, the dividend has steadily increased. And the board has put dividend guidance into the public domain, which also points to increases both in the current financial year, where the target is 8.05 pence, and also the next financial year, where the target is 8.25 pence. So just over 3/4 of HICL's portfolio by value is invested in public-private partnerships. And these are projects that receive income based on availability from public sector counterparties. So that could be in relation to schools or hospitals or roads. So that's the majority of the portfolio today. About 1/5 is invested into assets where the revenues are dependent on the usage, the underlying usage of the infrastructure. A good example of that is a toll road, for example. And then lastly, the fund has a relatively small exposure to regulated assets, and these could be transmission and distribution of gas and electricity, or in the case of HICL, an investment in a water utility here in the UK. For example, public-private partnerships, we have a number of investments here in the UK, in particular in relation to healthcare. So there are a number of hospitals in the UK where HICL is responsible for the maintenance of the building. We don't provide the doctors and nurses. The public sector, the NHS, are the ones who are delivering healthcare, but we are responsible for maintaining facilities and making sure they're available for use. One example of that would be Southmead Hospital in Bristol. In relation to demand-based assets, I talked about toll roads, but there's also the High-Speed 1 line, which is the connection between St Pancras Station and the Channel Tunnel here in the UK. That's another investment which we hold in the HICL portfolio. And lastly, I mentioned regulated assets, and one example of those is Affinity Water, which is one of the water utilities here in the southeast of England. It has a service area just to the north and northwest of London, and also an area in Essex and one in Kent. Well, it's been an interesting 12 months, and there have been some quite important challenges, both in relation to political risk here in the UK, regulatory risk, particularly around the water sector, and also a key risk for infrastructure investors being counterparty risk, and we've had the liquidation of Carillion in January this year. And to some extent or another, HICL has been impacted by these various risks. Although I think it's interesting to note that the company's performance has been really quite resilient in that period. And in particular, if you look at the total return for the company for the year to 31st of March 2018, we delivered a positive 5.7% return on the basis of increase in net asset value and dividends paid to shareholders. So the business model for HICL is built around 3 key activities. One is value preservation, and then there's value enhancement and accretive investment. Value preservation is about delivering the base case within the portfolio, how we meet the targets that we have to deliver that income, which I talked about earlier, to shareholders. And then we have value enhancement, which is the ways in which we go about trying to outperform our base case and deliver an element of capital growth for shareholders. And then lastly, accretive investment. And interestingly, the fund over the years, as I mentioned earlier, has grown from 18 investments to 116. So has made a number of accretive investments. Often these are made by approaching through infrared relationships, asset owners who might be prepared to sell their investments to HICL without necessarily going through an auction process. So relationships are very important in filtering opportunities that might be of interest to HICL. We have an investment committee process within infrared, which is an important part of sifting through, analysing and assessing options, and for making sure that when we add to the portfolio, the investments that we make are accretive. And the accretive tests that we look at are whether they enhance the total return from the portfolio, whether an investment will improve inflation correlation, improve yield, or extend the longevity of the cash flows which are coming from the portfolio. If you think about infrastructure as an investment, people are looking for long-term stable cash flows. So longevity is a key component that we look at when assessing new investments. And it's probably worth saying that infrared as a business, we organise ourselves around the delivery of these three parts of the business model. We have an asset management team which is very focused on delivering the base case, a portfolio management team which looks across the HICL portfolio for opportunities to release value, and an origination and execution team which is based not just in London but also in our offices in Sydney and New York, providing us with market coverage, market intelligence and the ability to originate those opportunities which we then analyse before making investments on behalf of HICL. I think one of the good measures of HICL's performance is to look over the period since its IPO. Infrastructure is a long-term investment, and since IPO the company has delivered a 9.3% per annum total return, and that's measured on the basis of net asset value increases plus dividends paid. So for those investors who bought at the time of the IPO, their total return has been an average of 9.3% per annum.